Two investment moguls are betting on different directions for inflation and Treasury yields, with potentially negative impacts on Bitcoin. Warren Buffett and Bill Ackman are two of the most successful investors in the world, but they have taken opposing views on the bond market in recent months. These differing stances on Treasury yields could have ripple effects throughout the financial markets, including the volatile realm of cryptocurrencies like Bitcoin. Buffett's tactical move: short-term Treasury bills. Renowned for his value investing approach, Warren Buffett, the chairman and CEO of Berkshire Hathaway, has made headlines by turning his attention to short-term Treasury bills. This strategic shift reflects Buffett's assessment of the current economic landscape. As inflation concerns continue to loom and interest rates remain a topic of debate, Buffett's move suggests a cautious approach. The Oracle of Omaha's investment in short-term Treasury bills is an indication of his confidence in their stability and relatively lower risk compared to long-term bonds. By positioning himself in these short-term assets, Buffett may be hedging against potential interest rate hikes that could impact longer-term investments. Ackman's contrarian approach: shorting long-term Treasury bonds. On the other side of the spectrum is Bill Ackman, an American hedge fund manager and activist investor. Ackman's stance involves shorting long-term Treasury bonds, a decision that reflects his unique perspective on the market's direction. As the founder and CEO of Pershing Square Capital Management, Ackman manages a substantial hedge fund with assets exceeding $20 billion. Ackman's decision to short long-term Treasury bonds is a bet against their value, implying a belief that interest rates may rise and bond prices may fall. This contrarian approach underscores Ackman's willingness to challenge conventional wisdom and capitalize on potential market fluctuations. Clash of titans: differing views on inflation and yields. At the heart of this clash between Buffett and Ackman are differing views on inflation and Treasury yields. Buffett's move towards short-term Treasury bills suggests a concern for potential inflation and a preference for shorter duration investments. In contrast, Ackman's shorting of long-term Treasury bonds reflects a conviction that yields could rise, potentially impacting the value of these bonds. This divide in perspectives could have significant implications for investors across various asset classes. As the two investment moguls take opposing sides, the bond market's future trajectory becomes a subject of heightened interest and scrutiny. Bitcoin's balancing act: caught in the crossfire. As Buffett and Ackman engage in their tactical maneuvers within the bond market, the question arises: what does this mean for Bitcoin? The cryptocurrency landscape has often been characterized by its sensitivity to macroeconomic trends and global financial developments. Bitcoin, often touted as digital gold and a potential hedge against traditional market volatility, could be influenced by the outcome of Buffett and Ackman's divergent strategies. In an environment where Treasury yields and interest rates are in flux, Bitcoin's role as a store of value may come into question. The ripple effect: potential impacts on financial markets. The decisions made by investment giants like Buffett and Ackman have the potential to send ripples throughout the broader financial markets. A shift in Treasury yields and interest rates could lead to adjustments in investment portfolios across various sectors. These adjustments, in turn, might influence the perceived attractiveness of alternative assets like cryptocurrencies. Investors, both institutional and retail, will closely monitor how Buffett and Ackman's positions unfold. The bond market, often considered a barometer of economic sentiment, could offer insights into the broader financial landscape and shape investor behavior across different asset classes. Navigating uncertainty: the Bitcoin perspective. Amidst the divergent strategies of Buffett and Ackman, the cryptocurrency community closely watches for signals on how Bitcoin might react. Bitcoin, renowned for its decentralized nature and limited supply, has often been hailed as a potential safe haven asset during times of economic turmoil. Bitcoin's resilience amidst market flux. While the opposing positions of Buffett and Ackman create uncertainty, Bitcoin has shown resilience in the face of market fluctuations. Over the years, Bitcoin has weathered various economic challenges and emerged as a digital asset with a unique value proposition. Its decentralized nature, scarcity, and growing adoption have positioned it as a potential hedge against traditional market volatility. Bitcoin's appeal as digital gold may come into sharper focus if Treasury yields and interest rates experience significant upheaval. Investors seeking alternative stores of value could increasingly turn to Bitcoin as a means of diversification and protection against potential economic headwinds. The intersection of traditional and digital finance. Buffett and Ackman's opposing views underscore the evolving intersection of traditional finance and the digital realm. The investment landscape is undergoing a transformation as cryptocurrencies gain prominence alongside traditional assets. This convergence prompts discussions about how these distinct worlds might interact and influence one another. Bitcoin as a diversification strategy. As traditional investment strategies adapt to changing economic conditions, Bitcoin's role in diversification becomes more pronounced. The cryptocurrency's low correlation with traditional assets makes it an attractive option for investors looking to balance their portfolios. In an environment where Treasury yields are uncertain, Bitcoin's potential to provide uncorrelated returns could become a key consideration for savvy investors. Regulatory considerations and market sentiment. The regulatory environment surrounding cryptocurrencies also plays a crucial role in shaping their value and adoption. Government policies and regulations can significantly impact investor sentiment and market dynamics, further intertwining the fate of Bitcoin with traditional financial markets. Regulatory clarity and confidence. Buffett and Ackman's opposing positions on Treasury yields coincide with a broader context of regulatory developments in the cryptocurrency space. As governments and regulatory bodies around the world grapple with how to classify and oversee cryptocurrencies, market participants seek clarity and regulatory certainty. A favorable regulatory framework that recognizes and accommodates digital assets could contribute to increased investor confidence in Bitcoin. Conversely, regulatory challenges or unfavorable decisions could introduce additional volatility to the market, potentially impacting Bitcoin's appeal as a hedge. The future unfolds. A balancing act. The contrasting strategies of Warren Buffett and Bill Ackman serve as a microcosm of the broader financial landscape, where diverse perspectives vie for dominance. As these investment titans navigate the intricacies of the bond market, their decisions ripple through various asset classes, including the ever-evolving world of cryptocurrencies. Bitcoin's ongoing evolution. Bitcoin's journey is far from over. Its trajectory is influenced by a multitude of factors, ranging from macroeconomic trends and regulatory developments to technological advancements and market sentiment. The cryptocurrency's ability to adapt and thrive amidst uncertainty has been a hallmark of its resilience. Final thoughts. An uncharted path. In the arena of finance, uncertainty is a constant companion. The differing positions of Warren Buffett and Bill Ackman highlight the complex interplay of economic forces and individual perspectives that shape investment decisions. As Bitcoin finds itself at the nexus of these opposing views, its role as a potential hedge and store of value is subjected to new scrutiny. The ongoing saga of Treasury yields, inflation, and interest rates continues to unfold, and with it, the intricate relationship between traditional financial markets and the burgeoning world of cryptocurrencies. Ultimately, only time will reveal the true impact of Buffett and Ackman's strategies on Bitcoin and the broader investment landscape. As investors and observers, we remain poised on the precipice of discovery, watching as the paths of these investment moguls converge and diverge in an ever-shifting financial panorama.